Hi everyone, and welcome to this penultimate financial broadcast before the Christmas. So it's the Christmas Eve for the Monday 24th December 2018. My name is Francois Ablé. Hope that you're doing very well. So I would like to thanks everybody to help me for reaching like the number of subscribers, which is grow each day, and I thank you so much for that. Also, it's just it's a kind of my comeback because I was out for a very short period, like probably 2 weeks, because I just want to be focused on the website, so the platform for GSTM member. So that's why I did the launch the last time. So now the website is not completely done, but it's still operational, and also we keep saying we still improving the all the menu and for the services on the website. So if you type or you see in front of your screen www.gstacademy in one word.com, you can go in to take a look there. I read like so much the articles and also informative content, and also I give you all the tools, then you can be successful on the financial markets. The all the main product that you use to for trading, right? And also for the 2019, there's also another things that we will add on the on the website. Okay. So thank you so much for watching this video. It's the again the uh, the last before financial broadcast, because on the 31st, like the Saint Sylvester, we make also another the last financial broadcast for the 2018, but that would be the broadcast will be on to see like the projection for the that we have to expect on the 2019, right? So today is just like a summary of the on the global context. That's why I call special edition for this financial broadcast. Okay, so let's go. Before for starting, so for the disclaimer, so futures, equity, ETF option, so all the derivative product that we use to in this activity can also can give like a great potential reward, but also represent a massive risk for your capital. So you need to be careful with that. And if you are not tolerant to the risk, you need to just make sure that the money that you put on table you can afford to lose. Otherwise, don't do that trading, because it's not like a funny activity. You put money, and don't think that it's a kind of gambling. So you need to be very careful with that. Okay. So here is a disclaimer. All right. So weekly market analysis number 36 for the December. So for today to 24th to the 30. Today is a special financial broadcast because, as I said, we'll just talk about the global context for major assets. So to make a long story short, I just put in front of you the summary of all the topics, which is very important for the as a trader. You need to know all of this, because is it this fundamental analysis which is drive and guide the all the major asset and and for the contest. And then you can take an advantage for that if you also use a technical analysis just for optimizing your timing, right? So you need to be aware of all the topics here, which is front of you. I will start with the bond. We'll take a look for the bond trading, right? Based on the Europe and the US, because I will show you after the presentation of all these topics. I will show you a chart which is put emphasis a spread between Europe and the US, because we know that in Europe we have the Italy and France and Germany, which is drive the European and bond market, European bond market, as the bond and also the BTP. Also, I will show you after the bond, I will show you the Forex for the Forex, which I call like for the Brexit, which is Article 50 and immigration border issue, the war diplomatic between China and Canada, and also we'll see like each major chart relative to those topics that I present here on the balance sheet shrink, and also like balancing shrink on the Fed, and also the buyback asset program cutting by Jerome Powell for now, and also the neutral pace of QE for ECB, and the neutral policy and balanced trade surplus for the BOG, because you know that BOG keeps the rate interest unchanged. So they probably also going to the bearish market, following the fact that the Fed also putting like the major on the pressure on the major indices, right? And also for the index, we know that we have definitely in a bear market. We also have a kind of jeopardy with internal politics and geopolitics too, like with the Syria and Iran affairs, and potential shutdown also because of Mexico world border financing, right? And also the compromising Fed for monetary policy, which is we call or the major analysis call dovish rate hike, right? In terms of commodity, oil, and we have a supply versus demand concern. Indices go despite worrying period. So that being said, we seen that it's very kind of uncertainty period, but the gold seems to not like going straight forward, and the financial market is just doing like up and down, still progressive on the time, but it's not like directional, right? So it's not something which is great for for sure the safe assets will be prioritized, but it's not also great for real estate, because you know that oil is very correlated to the real estate, and it will be for sure translated to the real estate market after the oil collapse. And to finish, we have the emerging market slowing growth in China, because China lose lots of money on the tariff and all the penalties that the United States put to the economy. So now they just have kind of momentum of brief, because we have others issue with the global news and economy. But probably after the 2018, so at the beginning to the 2019, they were starting again to continuing to negotiate on the like the United States, the American product will have to be penetrated to the territory of China, right? So that's why Xi Jinping still dealing with the president, American Mr. Donald Trump. Okay, so basically this is all the global context for and topics for the major assets. In terms of the bond trading, inverted or flattening yield curve, it's just to see, we will see it on the chart, but basically it's just to see the difference between the Italian and the Germany bond, so the BTP bond, so the spread for 2 years and 10 years as I built, and it's a kind of a dynamical spread between the two years and 10 years to see if we are also going to the recession, or the recession still looming on the European market. So we will see on the chart where is the level of this dynamical and differential spread between Italia and Germany. Also on the Forex, right now we have breaks the Article 50 and the for the Brexit, which is kind of is a main issue of the because the European Court of Justice has ruled that UK can unilaterally revoke this Article 50 and put a stop to the Brexit, right? So this is a clear decision which is sent to the Parliament, MP, and the British government, and also Theresa May. But what is exactly the Article 50? Article 50 is a kind of is a based on the Treaty of the Lisbon, which is give any EU member state the right to live unilaterally again, and outlines the procedures for doing so. So if you want to, like, otherwise, if you for the given to the living country, they can also negotiate 2 years to the exit, right? So this is like the law. But before that, they create this article in 2007. No one country asked for this kind of request, so there's no like predisposition that's made before this article, and it's just in 2009 that then they apply and is still effective to doing this process, right? But the main issue with that is because the British government or the Great Britain, if you take a look carefully and you read, like fundamentally, the, like the United Kingdom has never been in a EU member, because they have their own currency, they have their own juridical structure. So they just live in the European territory, but they're not definitely an EU member, right? They just share they just share the territory because they are in Europe. So they have been considered as a European country because they stay in a European territory, but they are not a European EU member, right? Because they are 27. And the Article 15, the Article 50 can be revoked by just a if you are a member, if your country a member country of the EU EU organization, you can provoke and revocation of the Article 50. But the United Kingdom is not, unfortunately, an EU member, even they stay in Europe, right? Because they have their own currency. Again, they own a military force and also a juridical structure. So that's why Theresa May very scared about that, because to provoke a revocation and a negotiation deal to leave the EU, they have to be a member, and there's not a member, right? And you need also to get an agreement and approbation for the others 27 country members. So which is very difficult for the government, because most of like probably Italia, and that's we because the Italia, we don't know like really they what they thinking about, like to stay or to leave EU. Sometimes they are considered as a skeptical country for Europe, and sometimes also they trying to pushing and to saying we want to stay in Europe. So there's no like a very clear idea, very clear clue in terms of like the willingness to leave the EU. But just the big country as Germany and France and Italy and others country which is considered as small, they probably doing a lobby to to counter against the GBP for staying in the EU. And this is a bad thing for the British government, because if they provoke kind of a repercussion for leaving the EU, and then after they lose this battle, they won't get a rebate for this divorce, and also they won't again have access, right, to the Schengen area. So that's why it's a kind of very difficult and hard time for the government for British to get some like a good, as they call, good deal or bad deal. And Theresa May said, we prefer to have a no deal before instead to bad deal. So it's just like the main issue, which is the Article 50, and also immigration border issue also, because Northern Ireland is which has like the big city, which is Belfast. They are considered as a United Kingdom, and you have also Republic of Ireland, which is Dublin, which is they consider as a European and member, because they are in EU. They count into the 27 European country. So Theresa May did not want to put kind of a wall on the border between the Northern Ireland and also the Dublin, which is not existing before. It's a kind of the same problem as the Mexico wall border, also between United States and and Mexico. Sorry. So those kind of like issue putting so much pressure on the GBP, and that's why the trade for GBP could be nice for you if you follow the GBP USD, because we are in the end of a year. We are like we'll see on the chart right now, because the level is still like a great timing to for shorting, but we need to have a kind of like through the next period for upcoming, we need to have like some like a details, which is through the timing for getting into position for short, for sure. And also in the Europe, we know that ECB make a comment through Mario Draghi. He said that the based on the condition of the economy and the shape of the economy for the European Economic Zone, they still to continue the famous QE, which is supporting the economy, and those kind of statements is a kind just putting some like misinterpreting on the clear intention for just finish in the like to finish to stop the program for supporting economy with QE, and also buying back asset program in the Europe. That's why it's very we can consider as a neutral pace of QE, because they mention as many times that they would like to stop to support the economy, but Mario Draghi said he's not confident right now for the economy based on the global context on the United States and also the Japan. So he don't want also apply a monetary policy restrictive to and make shrinking the balance sheet. Okay, so it's very difficult for. It's a kind of like neutral. We don't know exactly what will be happen for the euro currency, and for neutral monetary policy, and also Japan also keeps the rates unchanged, and also make a comment with like Ariko Kuroda said that we are probably in a bear market, so we just stay in that time just to leave the rate interest and then see what happened with after the end of 2018. So it will continue again, like since 20 years, to just stay very low the rate interest, as we call the ZERP policy, which is like zero interest rate policy. It could be also going to the NERP, like the negative interest rate policy, just to keep continuing to support the in economy. Okay, and to finish, we know that based on the tension on the of course now it's just like a very quiet, but before that we have a very hard time on the China with the war trade, and this, so we have a slowing growth in China. So now it's not probably it's just a quick brief for the economy, but is very affecting the GDP for the China, for the government of China. And China is considered as the second very powerful country in terms of economy. After first is United States. So if both are very have a very like in hard time, we can definitely consider as the recession is probably on the next door, right? So that's why the best things to do here is probably to prioritize the commodity and also the forex trade, because is there that we can have like a massive kind of a reallocating and transfer for the fund for the like the smart money they could go in this prioritize like forex and commodity, so you can take an advantage for the probably upcoming major momentum based on the this context of the economy. And to finish, for the index, we know that the bear market launched with S&P, and we have a kind of issue which is very affecting the dollar index, because the politics of United States affect the dollar index. Is not microeconomy, is the politics, because politics is very put very emphasis and very put like hard time and difficulties on the dollar, because we the dollar could play like both role as to be a safe asset or to be also in a risky asset. And for now, when we have like an of uncertainty on the United States, the dollar just evolved as to safe asset. It could be considered because the major investor prefer to stay with a country with a very a powerful country instead to going with others currency, right? So Syria and Syria case and Iran affairs too can affect also the dollar, because as you see here, as you see the recently the Jim Mattis, which is was the Secretary of Defense, has presented resignation because the President American Donald Trump sent unilaterally a news that he want that the troops for the soldiers, American soldiers, have to be leaving to the Syria. So we don't know if it's this news was just to send the troop to support Ukrainian country with like the also issue between Ukraine and Russia, or it's just to save money because it's very it costs a lot of money to support the troop, like they did that since like very like 10 to 15 years. So it could also just make the troop retract, then he make the government save money to just financing the Mexico wall border, or it's just because he's just tired to do the war, and then he prefer to resend or reallocate the troops for helping the Ukraine government to face to the Russia, because Russia also gets some hostage Ukrainian on the and the Marines and all the uh, tools for military troops and maritime troops for Ukrainian. So we don't know if it's just for helping Ukrainian country, or it's just for saving money for financing the Mexico wall border. So it's very messed up situation, and that's why he said if you don't found me, I will provoke a potential shutdown for the financing and for the administration of the economy, because they just need $5 billion just to finance the wall, right? So $5 billion is not something very. It doesn't matter in their budget bond, which is probably over 20 trillion. So $5 billion is very easy to get it, but because after the midterm of the United States. You know that the Democrats wins like a lot of seats in the Congress. So that's why they will just like block or any suggestion of the government for Republican, and they just want to say that they say we're not financing the Mexico wall border because they're not happy with the politics, and it's not great for the immigration in terms of like the economy, right, and the immigration and the relationship between United States and Mexico. So that's why the president American would like all the price to build a wall just to to apply what he said before when he was running for the presidency, right? So this is a typical politics, and is affecting again the dollar. And also we have a compromising of the Fed for the monetary policy, because the Fed also still hiking the rate interest to the United States, and he's doing that is a kind of the message behind that is a kind of a message sent to the Donald Trump, because he's make as I said, he's make policy instead economy, because at that time, as the Japan said that we're pretty much in bearish market, so we will keep the rate interest neutral or low. But the Fed doesn't doing the same thing, because previously Donald Trump made a comment that he's expecting that the Fed will stay neutral or decrease the rate interest, and it's a kind of like putting some like it's going against its transparency and sovereignty and freedom to the Fed for pilot his own like monetary policy. So they just like increase the rate interest just to show to the Donald Trump that they are their own boss, right? So that's why he's putting so much pressure on the index. So this is all the summary that I would like to talk. And now we go to the chart very quickly. So as you see here, I built like the spread for Italian, like a dynamical spread between the BTP and the bond, which is 2 years and 10 years. We know that if it's the 10 years, if the 2 years is now inverted to the 10 years, we're probably going to the recession, right? So is it like flattening yield curve or neutral yield curve? So as you see here in this chart is a kind of pretty much 26 years for like in the chart here. So we saw that in 1992 and like 1992 to 1994 we got like a massive collapse between the spread, because it was at that time it was like the oil and the bond collapse. So the oil crisis provoked the bond collapse because of the very massive inflation. So that's why they create most of country at that time create some like giving some emission to the central banks to just maintain and keeps the inflation as a targeting for 2% is just after this kind of crash. And after we have also in the for the QE and ultra easy policy, like for QE and all those like non-conventional policy, we have a spread which is very doing like a rally, a massive rally, and after it's drop off because most of country also stopping to doing this kind of policy, right? So the conclusion to have here is just to say to know that when we starting to get some like a recession or like a financial crisis, the bond will probably fall off, like going on the below. And when we have like a kind of expansion of the economy, we're probably going below this the zero line. So now we are sub-zero. We are below the zero line here, which is the pink one. And then if you're going also below this minus 1.5%, then that would be we have in a recession with crisis. So now we just on the front of the door of the on the recession. So very, very, very careful with the Europe. So that's why you probably see the DAX, the Euro stock 50, the also the FTSE, the all the major European stock will probably going to the low. They will be probably collapse, right? As long as this spread, dynamical spread, will be going to the low. And after when this dynamical spread will be like going above 0%. That being said, that we will be in like in kind of supporting economy, and then the government will be intervening, and the index will probably starting a new cycle of rally, right? You clearly see here in 2007 that we 2007, 2008, and 2009 we were collapsing, right? So very important. So let's take a look now for the S&P 500. So S&P 500 here, as you probably see this chart that I present on the previous financial broadcast, and also on the articles. You see clearly here that we break this ascending channel for kind of lateralization. We break it, and we close to the target, like the first target that I draw like since one month before. So we probably end up the major correction that we are expecting, because if you're doing like a rate growth between the highest point of on the S&P, which were the 22nd of 2018, and probably the low will be done probably over the next few days upcoming. You will see kind of a correction for 25% or more, right? Because at that time we already done 20% of the correction, like from since here to here. So if we keep continuing to doing like this correction, like we're doing like a massive correction here, it's doing like very straight. And if you keep continuing, we probably made 25% or more since a previous highest point here on the 22nd September, which were like 2,937, right? So the bear market's probably still is there, definitely. But if we break this level here, we probably goes to a next support, which is here, right? So if we break this level here, we'll probably be in a financial crisis, as like the recession, right? So this one here will be the next battle, the next test. And after that, after this test, if we break it, we're going onto the previous support, which is like around 1,900 or 1900. Is this level here, which were like before the election of the President Trump as the November 2016. So very, very careful with this level. It's the same thing exactly if you're going to see the Dow Jones. So it's exactly the same pattern. So we have here the last level, which were kind of considered as the support. We break it, so we're probably going. If the recession is still looming, we're probably going until the Trump election as this level here, as I draw, right? Which were like 18,000 here. So that's why the major index as the Nasdaq, S&P 500, Dow Jones are very bearish. Even also the DAX, which were basically follow them because they are the major assets. And also, if you take a look also quickly to the oil and the bond, no, oil and gold to finish this financial broadcast. You see here for the oil. I read a an article where I said if we close on the top for the 47 level at the blue equal line here, if you stay above then close here, we probably get some like a bounce, but we didn't. We failed it, right? We failed the this line here, so we break here. So the next support, as I said, would be the $42 per barrel that we're going to test. And if you take a look here, we are in 45, right? Because we break $47 per barrel, right? So I'm expecting that we is not we are not like doing like we're not bottom the oil right now. We probably keep continuing. Even we heard some of rumor between the OPEC member and the non-OPEC member, which were said that they probably agree to cut a production and then putting some like a quota on the production of the oil. Then they could for sure support the oil and probably rebound for the next upcoming weeks on the oil. But I prefer to tell you that I, I would like if I probably expecting to buy a oil, it will be definitely around like a $42, right? For $42 per barrel, like at, at that level, right? Um, it's probably gone, so let me fix that. So that level here will be all right. So at that level here, it's probably the best things to buy a gold, to buy a oil here, $42, because we just fell the $47 per barrel, and then the market did not rebound, so we fell it. So this is probably the next. So between 42 barrel, $42 per barrel, or probably $40 right here. All right. So so we are again also we have $5 for losing before, and then we can expecting some a rebounds. So that probably be coinciding with like the if the S&P 500 reach the target for the at the 2,327. So if it rebounds on this level, and then will be probably also the oil rebounds to the $40, and then after we can expecting for the kind of a rebound and recover on the oil. Otherwise, if the S&P 500 break this level, we're probably going and fall off to the and getting to like financial crisis as 2018. Now we just like a bearish market, which is not a financial crisis. But if we break those levels, we're probably going so far, So let's finish this financial broadcast with the gold. So at the goal here, we have a massive range. As you can see here, we can, if you're duplicating this range, it will send you for the target on the top here, which is like a theoretical target. And the way to buy gold is like where is, if I put it here in green, which were like 1180 or 1190. And now it's not going like a straightforward, because sometimes if the politics put uncertainty, as I said, on the dollar, it could affecting the oil, because the dollar just evolve when we have a tension on the internal politics. So that's why here, when the is going to and is test this level, this low, older people buy it will be very they're very smart, so they buy. We progressively we going like we close to the 12 12 1257 like on the previous week, and now we just in 1261, so it's still continuing to pushing forward. So that being said, we probably seen a rebound for this week. Just just a quick brief because it's there is a last Monday before the Christmas is a Christmas Eve, so the last Monday before the Christmas. So they eternal like for the entrepreneurs of economic, they probably take off the money from the markets, so it kind of illiquidity situation on the markets, because if they were a short position on the index, they probably take profit or reduce the size of their position, so it could just propel the gold and the index, right? So it's just like a for the very short time period moment. So you have to be very careful with that. The best thing to do is just to waiting after the closing of the year, so the end of year. So the next Monday we will see the projection that we can expect on the major asset, as I said. Then it could give us like more information to know if in January 2019 or the new year upcoming will be bullish or bearish on the gold. We can going very quickly to the monthly and apply a moving average. I can put like a dynamical moving average. Sorry, is on the French right now. So exponential moving average. So for the so we are monthly. So I put some like for kind of annual monthly. Okay, so just voila. So those kind of things. So we see here clearly that's the closing line of the goal. If I just zoom the screen, you see that we cross the 10 12 a monthly period on the gold, right? In the blue here we cross it. But if we not closing above this line here, we cannot pretend that we be bullish in 2019. So see, this kind of works that we will doing the next Monday. So I'm just like finish here. I'm just stay here, but very careful to buy gold right now, because we could definitely going to the back, and then also building a like building for the pattern for like a double bottom, and then we're going to test a previous lower higher, sorry. So we're going to test like a lower here, where it has to be bought every time, and then going to the test on the top here. So thank you so much for watching this video. It was like a special edition to study together on the major assets. So I described to you the global context. I show you a couple of charts just to be aware on the financial market. If you like it, would be a very appreciated to to like, and it support me and support the channel too, and it's also give me like the motivation to keep continuing to do research and and feed the sorry for my voice, I'm just a bit cool and flu, so it's happy to feed the channel for YouTube. And also, as I said, we're starting now in the beginning of 2019 for doing a training courses through the platform for gstacademy.com. So you can definitely go in there and starting to work with us if it's looking to be framed, and also to get some like skills to win on the financial market and have success to be successful. Okay, so thank you so much for watching this video. I see you around. So take an advantage to be staying a family because it's a holiday period. Don't do it over trading, please. Take an advantage to stay your family and having fun with like this period, which is a family period. Okay, so the market won't gone. So don't do over trading. See you around for the next video, probably on the next Monday, which is the 31st of the Saint Sylvester. Bye bye.